In the evolving global landscape, a compelling economic contest is unfolding between the BRICS nations and the Group of Seven, G7 countries, significantly reshaping the world economy as these blocs vie for economic supremacy. The G7, comprising the United States, Canada, the United Kingdom, France, Germany, Italy, and Japan, emerged in the 1970s. For decades, this coalition of long-established industrialized democracies served as an informal steering committee for the global economy, their dominance in international finance and trade a defining feature of the late 20th and early 21st centuries. In contrast, the BRICS alliance, consisting of Brazil, Russia, India, China, and South Africa, is a more recent formation. The acronym, coined in 2001 to identify fast-growing emerging markets, led to the first BRICS summit in 2009, with South Africa joining in 2010. Uniting diverse political systems and regions, BRICS aims to amplify the voice of the developing world. Representing roughly 3.3 billion people, over 40% of the global population, BRICS holds a substantial demographic advantage over the G7's approximately one-tenth, hinting at their considerable long-term economic potential through vast markets and labor forces. While the G7 still leads in traditional economic measures, representing around 43% of global GDP due to their history of growth and high per capita incomes, the BRICS nations are rapidly catching up. Even before the inclusion of new members in 2024, BRICS accounted for roughly 29% of world output. However, when considering GDP adjusted for purchasing power parity, PPP, the balance has already shifted. In 2023, the combined economic output of BRICS, approximately $56 trillion in PPP, slightly surpassed the G7's $52 trillion. This metric underscores the increasing economic significance of emerging markets when differences in the cost of goods and services are factored in. Key drivers behind this shift are the rapid growth of China, already the world's second-largest economy, and India, the third-largest in PPP terms. Their growth rates significantly outpace those of any G7 member, with projections indicating continued above-average growth, steadily closing the wealth gap. Goldman Sachs even projects that BRICS economies will contribute the majority of global growth through 2050. Beyond sheer economic output, natural resources further favor BRICS. Collectively, these nations control a large share of commodities vital to the global economy. The planned inclusion of oil giants like Saudi Arabia in 2024 would mean the expanded BRICS bloc accounts for roughly 43% of global oil production. Furthermore, BRICS nations possess significant reserves of other essential resources, including iron ore, natural gas, and lithium. Conversely, the G7 countries are often resource importers, relying on stable trade to fuel their industrialized economies. The divergence between the G7 and BRICS extends beyond economics to encompass political goals and worldviews. The G7 presents itself as the guardian of a rules-based international order established after World War II, emphasizing democracy, human rights, and open markets in global forums. They often coordinate policies to uphold these values, such as imposing sanctions or funding development linked to governance reforms. In contrast, BRICS advocates for a multipolar world order where no single bloc dominates. They call for reforms to international institutions to grant emerging economies a greater voice, often stressing principles of national sovereignty and non-interference, reflecting a wariness of Western interventionism. The unifying factor for BRICS is a shared interest in challenging the status quo that has historically favored the G7. The expansion of BRICS aims to increase the representativeness and influence of the bloc, signaling a move to reshape global governance. A tangible manifestation of this ambition is the creation of new financial institutions. In 2015, the BRICS nations established the New Development Bank, NDB, as an alternative to Western-led lenders like the World Bank. Headquartered in Shanghai, the NDB funds infrastructure and sustainable development projects across emerging economies, having approved billions of dollars in loans. Notably, the NDB often issues loans in local currencies, aiming to reduce reliance on the US dollar, and offering an attractive option for countries in the Global South by financing projects without the policy conditions often attached by Western institutions. This aligns with a broader BRICS strategy to gradually challenge the US dollar's dominance in international finance. Recognizing the need to provide alternatives, the G7 has launched its own infrastructure investment initiatives for developing nations. In 2022, the G7 announced a plan to mobilize $600 billion by 2027 for global infrastructure, aiming to offer high-standard projects in Africa, Asia, and the Americas. These efforts are explicitly designed to water down China's financial influence in regions where the Belt and Road Initiative has gained traction, essentially responding to BRICS by competing for influence in the developing world through development finance and partnerships. The competition between the two blocs is particularly evident in the realm of currency and trade. The US dollar has long been the world's primary reserve and trade currency, giving G7 members significant leverage. However, BRICS nations have increasingly expressed the need to reduce this reliance. Discussions about a potential common BRICS currency gained momentum in 2023, with Brazil advocating for its creation to facilitate trade and avoid exchange rate vulnerabilities. While other BRICS leaders have been more cautious, the consensus is to boost trade in national currencies. Practical steps towards de-dollarization are already underway, with examples like India and the UAE conducting oil trade in rupees, and China and Brazil agreeing to denominate trade in yuan and reals. This growing willingness to transact outside the dollar system is driven by motivations ranging from cost savings to hedging against geopolitical risks. And for countries like China and Russia, it's a strategic necessity in light of Western sanctions. This has led to a significant increase in trade between Russia and China, with India also capitalizing on discounted Russian oil. The G7 and BRICS also differ in their approach to economic statecraft. G7 nations frequently employ sanctions and export controls to influence state behavior, as seen in their response to Russia's invasion of Ukraine. They have also discussed de-risking their economies from over-reliance on China. BRICS countries, on the other hand, generally avoid sanctions, emphasizing dialogue and often criticizing the West for weaponizing economic interdependence. This fundamental difference is evident in their responses to global issues, such as the Ukraine conflict, where BRICS members have maintained engagement with Russia as a partner, in contrast to the G7's imposition of sweeping sanctions. The global influence of these blocs also manifests in their roles within international institutions. The G7 holds significant sway in institutions they were instrumental in creating. Feeling underrepresented, BRICS has been actively pushing for reforms, including permanent seats for nations like India and Brazil on the UN Security Council, and adjustments to IMF voting quotas. The expansion of the BRICS bloc with the invitation of Saudi Arabia, Iran, Egypt, Argentina, Ethiopia, and the UAE marks a significant development, potentially transforming BRICS into a broader coalition of the Global South. While the G7 remains a closed group, it has sought to engage with other democracies and emerging economies through partnerships and by inviting guest countries to its summits, reinforcing a coalition of like-minded states, while BRICS is evolving into a coalition of the economically disenfranchised. Despite the competitive framing, the global economy's deep interdependence necessitates cooperation. Both blocs participate in the G20, finding common ground on issues like debt relief and climate finance. This demonstrates that rivalry can be put aside when mutual interests align, and both blocs face shared global challenges requiring collective action. The concept of coopetition aptly describes the dynamic, where cooperation and competition coexist. For instance, the US and China compete fiercely but must collaborate on climate initiatives. India maintains strong ties with both blocs. Looking ahead, the battle for global economic influence is expected to intensify. The G7 will leverage its financial resources and technological innovation, while BRICS, fueled by rapid growth and resources, will continue to push for a recalibration of global rules. This competition will likely lead to new initiatives from both sides. Ultimately, this rivalry will shape the choices of countries worldwide. The future geopolitical landscape will likely be more complex, with influence measured by the ability to provide solutions to global problems. The bloc that better addresses the needs of developing countries could gain a significant advantage. In conclusion, the G7 and BRICS represent the established order and the rising challenger in the global economic arena. Their interaction is characterized by both competition and the potential for collaboration. The coming years will be crucial in determining how each bloc adapts to the evolving landscape, likely redefining the architecture of international economics towards an emerging multipolar world with its inherent tensions and opportunities.